Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about a unique strategy for when the market pulls back. Today, as you guys have probably seen in your portfolios, it's a very red day today. Most of the major indices, pretty much all of the indices I've taken a look at so far are in the red. Notably, the S&P 500 is down 1.47%. The Dow 30 is down 1.48%, and the NASDAQ is down 2.12%. So a very unique strategy in these sorts of situations is utilizing inverse ETFs. And just to kind of illustrate the market right now, VOO is a very large S&P 500 ETF. It's basically tracking, you can see on the bottom there, market cap weighted index of U.S. large and mid cap stocks of the S&P 500. So this is pretty much indicative of what the overall S&P 500 is doing. And you can see it's down 1.45%. Likewise, SPY, another S&P 500 ETF here, again, on the bottom, tracking a market cap weighted index of U.S. large and mid-cap stocks, again, down 1.4%. And to illustrate the NASDAQ here, this is a leveraged account. You can see on the bottom here, it's providing a 2 times daily exposure to a modified market cap weighted index of biotech and pharmaceutical companies in the NASDAQ. You can see that's down 3.39%. So a way of making some returns when the market is pulling back is using ETF. There's a number of different ETFs like this out there, but this is probably the most well-known, is using an inverse ETF. This one here, SQQQ, essentially goes up when the markets are trending down. You can see on the bottom there, it's a ProShares ETF, Ultra Pro Short QQQ, and you can see it provides a 3 times inverse exposure to a modified market cap weighted index of 100 of the largest non-financial stocks on the NASDAQ. So as the markets pull back, this stock essentially starts trending up. It's composed of the largest companies, like it said on the bottom, domestic and international on the NASDAQ, and the goal of this is trying to reproduce a daily investment result that is roughly opposite to the daily performance of the underlying index, which, as I mentioned on the bottom here, is the NASDAQ. It doesn't take all stocks in the NASDAQ, doesn't have any financial stocks in the NASDAQ, but for the most part, NASDAQ has the composition of technology stocks. So you can see on the bottom there, basically financial stocks would not be a big part of the NASDAQ anyway. You can see here, this is up 6.29% in a day when most of the indices, all of the indices that I've taken a look at, are in the red. There are a few caveats behind using this particular inverse ETF. It's for short-term use only. You would never want to hold this overnight. It's very high risk, high reward with regards to investing. So if the market were to start trending back up, this would go down very, very quickly. So you have to be able to monitor the performance or put in limit buy, limit sell orders prior to the market day, because this can move quite rapidly. And again, the big thing is you never want to hold this overnight. This is not a buy and hold stock. Gets a little bit technical with regards to how this stock is dealt with longer term holds. Again, you never want to do that. But basically, it's rebalanced on a daily basis. So this stock, you can see over the last 1 year, essentially is, let's go to the last 5 years actually. You can see it's simply trending down here because, again, this is a tool to be used basically for day trading. If you think the market's going to be pulling back, you buy this in the morning and then you sell off later in the day. You can do scalping. You can do a lot of more sophisticated day trading techniques with this particular stock. But this is a day trading stock when the market pulls back. And you can see that here, beginning of trading today, you can really see that it jumps up here quite considerably. Again, at one point up almost 7%, currently up 6.15. It's still jumping around here as we are in active hours trading here. So kind of a unique way of trading a down market. Again, the markets are pulling back here a bit today. All of the major indices I've taken a look at are down 1.5 to 2% plus. So this is a very high risk, high reward way of playing the markets in environment where the stocks are trending down. So again, very high risk, high reward for short-term daily use only. I would never hold this stock overnight, and this is definitely not a buy and hold stock, but a very unique way of trading the market when it is pulling back. So if you guys have any questions about that, let me know. If there's any other good stocks like that, let me know as well. This is the most well-known stock that I found. There's a couple others I found as well, but essentially very, very good stock to use when the market's pulling back. 3 times exposure, inverse to the NASDAQ. So yeah, just kind of wanted to let you guys know on a unique way of trading the market when the market is pulling back. Kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. And until next video, I'll see you then.